I'd like to welcome you guys to our Q4 PLN lending funds presentation. Today we'll be talking a little bit about the capital markets. We'll go over the fund performance for 2021 and primarily Q4. And then we'll wrap up with some housekeeping items for the end of the year. So capital markets, over the years, we've been talking about what's been happening with the lending rates and how with the lending rates going down, that directly affects the return to the fund that the fund's getting, and then ultimately the return to the investors. So 2018, we were able to offer 7 to 9, 2019, 6 to 8, 2020, 5 to 7. And then around 2021, we've been in that 5% range, and it continued to stay around that throughout the year. And then towards the end, I think we believe we wrapped up closer to about 5.25, 5.5. One of the things we always like to do is looking at other markets, different securities, and kind of see where we stack up. We also like to look at trends. So what we've been kind of seeing here, when you look at compared to like the high yield, corporate bonds, mortgage-backed securities, and the 10-year, started from 2020, and then after Q3 and you're seeing Q4, you're seeing these rates start to increase a little bit. One thing that we always want to look at is what the interest rate market is doing in general. So with interest rates going up, it actually makes it harder to lend on the borrower. So those prices start to come higher. So the rate that the borrower is actually getting starts to increase. And for us, we always want to make sure we're in line with the market, in line with our competition, just so that we're able to price risk accordingly. Originations, so you're looking at January 2020 through December 2021. One of the things that we always would like is a gradual increase over the years. That's what that dotted red line is. As you can see, with COVID going on in the early 2020, you saw a little bit of a dip when you look at April through July. We started to increase a little bit, and then it dipped off again as towards the end of the year, when there's a little more holidays, we always start to see a little bit lull in originations. And then early 2021, we got that a nice little spike, pick up some of the largest months we've ever had. And then towards the end of 2021, you saw that kind of fall off again for the originations. 2022, we got some big goals, and we're really wanting to focus on growing our pipeline for originations. The more we grow that pipeline, the easier it'll be for us to stay steady and keep that consistent originations throughout the year. Fund health and performance metrics. So the first one we're going to cover, LTV, loan to value. This is always important for us, especially right now with values across the country. Everyone's looking at appraisals. Some people aren't looking at appraisals, and everyone's trying to figure out online, oh, like, we've had the situation where builders are understanding like, hey, I can build it for more, but my appraisal is coming back lower than that's expected. And we've always been able to work with builders when it comes to this. We have our own lender opinion of value. We get appraisals, we get BPOs, primarily to make sure that the loan that is structured is right for the risk and the rate and everything else that comes with it. So that's why our underwriting guidelines are very important for us when we factor in the value. Loan to cost, you can see Q4, we ended at 81%. That's been pretty in line. That's a very important factor because that's how much cash a borrower is putting in the deal. We always like to see this number for an overall portfolio around 85. So the fact that we've been less, 85 is more industry standard, has been great to us. FICO, we saw a little bit of a dip compared to the last couple of quarters, but this is still a great FICO number for the overall portfolio, especially better than what we had in 2019, 2020, as we changed and went to more of a credit culture. Then when you go into terms left, like maturity, this factor, 20.73 in terms of months, this will always be a little bit higher because it is weighted and we do have larger deals in the portfolio that last about 24 months that are a couple $1 million loans compared to where like the average loan size for us is probably around 600,000. So that kind of just spikes it up just a little bit. Over the years, borrower experience has been something we've always prided ourselves on. So 76% of our borrowers are experts. So that means they paid us off 5+ times. This is huge when it comes to looking at delinquencies, when it comes to looking at foreclosures. And it's very important to us because that means we are verifying that these people can do it. We're saying we trust that these people to lend out the money to these people because they're going to stay consistent. They're going to get through the project in a timely manner, and then they'll pay us off with that. Ultimately, that's the end thing we would like. Market breakdown is the next one. Austin, Dallas, Houston, San Antonio will remain our bread and butter, our bread and butter, specifically Austin. And then we're starting to see a big kind of increase in San Antonio compared to other quarters, which is good, both very hot markets. And then this other category you'll start to see, these are some of the places outside of Austin, you'll say Killeen, and we actually have deals that are outside of Texas as well as we start to open up those markets nationwide. Continuing with some more metrics, utilization is one we want to call out here, seeing it increase over time. This is very important for us, especially because it's how we put the money, how we're putting those dollars to work. So being able to increase utilization is always going to directly affect the rate of return that the fund's getting and that our investors are receiving. The second one, payoffs. In Q4 of 2021, we saw minimal payoffs. That goes back to what I was saying towards the end of the year. We start to see a little bit less transacting. So seeing that 500,000 payoff number compared to 5 million, 4 million in the other quarters, that's just something we track. It also has to do with the maturity of the portfolio, so we make sure we stay in line with that. Draws stay pretty consistent throughout the year. Q4 ending about 2.3 million. 2020 had a larger average of 2.6, but overall, we're very happy with seeing construction continuing to move forward. Newer originations in Q4 2021, you see that drop again. Again, that's towards the end of the year when you're seeing less transactions due to holidays. And then delinquencies, this is a big number we really like. So Q1, we were at 3.34%, Q2, 5%. Q3 was a huge quarter for us, having 0 delinquencies. That really shows the credit to our servicing team, staying on top of the borrowers, calling them, figuring out if they need any help with anything. So that was just great to see. And then ending Q4 2021 at 1.13 is also just a great number, very low delinquencies. And then to the right, you can see the 2020 monthly average was 7.54. So throughout 2021, it's just been a great year for us in terms of delinquencies. This is one thing we've been talking about for a while now, and I'm happy to say we are officially complete with leverage. We are all docked up and we're ready to go. We actually plan to send out some communication out to all investors, and with that communication, it'll be explaining the benefits, it'll be explaining how it works, and then we'll be explaining some of the forecasts of what we see. Our biggest thing is how do we get to 7%? And leverage is exactly how we do that. So we'll explain where we were, what happened to the rates, and why you're seeing that closer to that 5%. And then we'll show you where we're going and how we're going to get closer to that 7%. Then a little bit of housekeeping items. Now that we're towards the end of the year, if you're in a fund, you're going to get a K1. So all of you will get a K1. Those usually come out in the middle of March. So they'll be coming out here shortly. And then if you're also in our direct loan program, you'll be getting a 1099. So with that, you should have received the 1099 towards the end of January. So if you haven't, please reach out to us and we can get you that information. Also, if you've had an address change or anything like that in the last 6 months, please reach out to us again. We want to make sure we have that documented. So then we send out those tax information, everything's clear. Lastly, we are having our first event for 2022. This is going to be in April, so it's going to be April 26th from 3 to 6 at a new brewery called Fierce Whiskers. It's going to be a great event. We're going to be happy to see anyone who can make it out. We'll be talking about, our products. We'll be talking about our industry and where it stands, kind of where the market conditions are currently. We'll have our partners there. We'll have some new employees that we have on different sections of the company, and we really hope to see you there. We sent this out about a week ago, so if you haven't received an invite or you'd like to come, please reach out to us at ir@noblecapital.com, and we can send that for you. I just want to say thank you guys for tuning in. And again, if you have any questions, please feel free to reach out to us at any time. Thank you for your time.